Good morning this Thursday, the 2nd of March. I'm Grady Wolf, a market analyst with Bell Direct. Rising bond yields fueled the sell-off on Wall Street overnight, with the benchmark 10-year yield topping 4% for the first time since November, while the 1-year Treasury yield climbed above 5%. Investors also reassessed the outlook for tightening monetary policy and economic growth, as data has been released this week around the world showing inflation remains stubbornly high in Europe and other key regions. The Dow Jones closed up 0.02%, while the S&P 500 fell 0.47% and the tech-heavy Nasdaq fell 0.66%. Salesforce shares soared 13% on Wednesday after the cloud software company posted better than expected fourth quarter and full year results, including Q4 revenue up 14% to $8.38 billion, while full year revenue rose 22%. The company's strong results were attributed to cost-cutting measures in the quarter, including laying off staff during the period as it pushes to become more profitable. Over in Europe, economic data continues to weigh on investor sentiment in the region, with local markets there closing mostly lower on Wednesday following the release of a flash estimate into Germany's harmonised inflation rate, showing an increase from 9.2% to 9.3% in February. This comes ahead of Eurozone inflation data due out on Tuesday. Germany's DAX fell 0.39%, the French CAC lost almost 0.5%, and in the UK, the FTSE 100 rose almost 0.5% on Wednesday. Global markets may face some relief today, though, buoyed by China releasing its official Purchasing Managers Index data for February overnight, showing a rise to 52.6 points in February, the highest since April 2012, in a sign the world's second largest economy is beginning to ramp up manufacturing and overall operations following the removal of its harsh COVID restrictions. Taking a look at commodities, oil is trading 0.66% higher this morning at $77.55 a barrel. Gold is up 0.56% at $1,837 an ounce, and iron ore is flat at $126 a ton. The Australian dollar is buying 68 US cents, 92.01 Japanese yen, 56.07 British pence, and 1 New Zealand dollar and 8 cents. Now, the local market slipped into the red yesterday after Australian GDP data for Q4 was released, showing the economy grew by 0.5% over the quarter, which is a slower pace than was expected. This is the fifth straight quarter of growth in the economy, but the softest pace of the period, amid intense cost of living pressures and rising interest rates. Ahead of the local trading session here in Australia, the SPI futures are anticipating the ASX to open flat on the second last trading session of this week. Stocks trading ex-dividend today include Baby Bunting, Woolworths, Propel Funeral Partners, Coles Group, Pro Medicus, Medibank Private, Pilbara Minerals and Jumbo Interactive. If you've been thinking about these stocks, it might be worth considering buying in today, as stocks trading ex-dividend generally trade lower on the ex-dividend date. And now let's dive into some trading ideas for your consideration today. Trading Central has identified a bullish signal on deep yellow following the formation of a pattern over a period of 22 days, which is roughly the same amount of time the share price may rise from the close of 68 cents to the range of 90 to 96 cents, according to standard principles of technical analysis. And Bell Potter has downgraded its price target on Bubs Australia to 29 cents per share, but maintains a hold rating on the company following the release of the infant formula company's first half results that focused on costs eating into margins. For the half, Bubs reported revenue down 6% and underlying EBITDA loss of $22 million, elevated inventory position of $8.4 million, and the expectation of higher operating cost assumptions between FY23 to 25. And that's all we have time for this morning. Have a wonderful Thursday and happy investing.